fulfilled a great need for the development of India. And it was my great privilege to serve on the board of that bank for a short period when the opportunity came.
And partnered almost every top drawer industrial house of today.
The Jindal Group has had a long association with IDBI since the early 90s, and IDBI, true to its name, has always supported the development of large industries. And one of the reasons for the industrial houses to go to IDBI is that their attitude towards industrialization of the country has been very, very positive, and they've always handheld industrial houses or the companies when they are in difficulties, unlike most other banks which tend to withdraw themselves as and when the industry goes through the downturn. So that gives us a tremendous amount of confidence to be with IDBI as a long-term player rather than a fair weather friend.
Financing all-embracing industrial development has been our core mission. But we have also simultaneously helped build a robust institutional framework of financial and capital market institutions through vision and commitment, equity and human capital. We have also indirectly addressed the financial needs of small and medium enterprises through state-level financial institutions and banks. Similarly, we set up a network of institutes to foster entrepreneurship and provide low-cost and efficient consultancy services. After an illustrious innings as the premier industrial sector DFI, IDBI, with enabling parliamentary and RBI approvals, converted itself into a full-service banking company on the 1st of October 2004, the Industrial Development Bank of India Limited, while retaining its focus on development finance for industry and infrastructure. IDBI Bank Limited, our commercial banking subsidiary, subsequently merged into the parent IDBI Limited on the 2nd of April 2005. This merger has been mutually gainful for all our stakeholders and clients in terms of synergies and efficiencies. Subsequently, on October 3rd, 2006, the erstwhile United Western Bank Limited, a private sector bank with a major concentration in Western Maharashtra, was merged into IDBI.
IDBI has truly been like a partner in the growth of the IEEE. In some sense, both the organizations share a symbiotic relationship. I can see that IDBI is evolving into a very contemporary, dynamic and vibrant organization that has a very important role to play going forward in the development and growth of Indian industry.
At Reliance, we have a very special relationship with IDBI. In the 80s and 90s, when Reliance invested 100,000 crores in core assets in India, IDBI as a development financial institution was its true partner. I am very sure that IDBI in its new avatar as a universal bank will contribute in equal measure to India's growth as an economic superpower and make a difference to millions of lives in India and help India integrate with the global economy.
Our long-term foreign currency debt ratings by international credit rating agencies have been generally at par with sovereign rating. Our strong capital base and low impaired assets ensure.
Yeah. See, this is a quick introduction about our bank. See, we have evolved as a development finance institution today into one of the largest commercial bank. Okay. The idea showing this presentation to you is, especially for the MSME, understanding credit is the very, very basic things. Business is always, it is a cyclic in nature. Our graphs will never be in upward trend. Business, it will go up, down. Understanding the business cycle, you need a very big and good banking partner. So when you come to the IDBI, now you must have seen, you name any corporates, they have evolved with the assistance from the IDBI. So now when the evaluation is there, naturally credit underwriting capability at IDBI will be always on a higher side. Okay. So with this background, I will give you only few 3 points. Today we are not a institution. Today we are a commercial bank. So we can do all kind of activities, starting from a small mudra loan to the very big corporate loans. Okay. So now, especially for MSMEs, what is there in our side? Okay. So during the panel discussion, I told you, keep your accounts very hygienic manner, right? Have your track record clean. These two things will take you into the next steps, right? Now, what are all the products, what are all the facilities you can take it from the IDBI? Naturally, only two things, either for creation of the fixed assets, long-term assets, or for your working capital limits, right? Fixed asset, it is a traditional term loan, it is there. Working capital side, today, whatever they are talking about cash flow based lending, it is there for the ages in the banking industry. Okay. So, being a MSME entrepreneur, they are very habituated for the CC loan or OD loan. Okay, CC or OD working capital, this is basically what for I am taking for procuring my raw material, converting into finished goods and selling into my parties, my realization is taking a time. So for this only I am taking a working capital loan. Now, if you want to convert into this, if you go to the bank, it is like a credit card, right? So credit card, we are having a 3 lakhs, 4 lakhs, 5 lakhs, whatever the limit is there, and the end use is not monitored. So your cash credit or overdraft limit, it is the same thing. So naturally end use, after you are using only, we can come to know how you have used. So this is the first and primary reasons why bank is insisting for either collateral or guarantee cover. Now if you know firmly, sir, I am going to buy the material from X, I am going to sell it to Y. Both the things we can structure, which is nothing but cash flow method. My raw material is being procured. Say, suppose if any exporter is there, they will understand very easily. They will be getting the order. They will be coming to the bank. I am having a 1 crore ka order. You take certain margin, 10%, 15%, 90 lakhs you give. So 90 lakhs will be given. Definitely your order says what is the shipment date. Before that you have to ship it. Now your party makes the payment after 30 days, we will be converting into the post shipment. Same thing it is possible in your normal domestic trade also, right? And which is at a very, very, very cheaper cost. Now if you are going for your normal CCOD facility, banker will be levying a charges at minimum of 10%, right? And additional charges. Now if you go to the simplest way is, you open a LC, right? Your cost will come down drastically from 10% to 2%. So, same thing, your supplier has to agree. You are getting the material. LC mein what we are giving a guarantee to your supplier, you supply, he will make the payment. If he is not making the payment, we will give you the payment. So, this is the undertaking we are giving, right? Now, since why we have to reduce our rate of interest here from 10% to 2%, I am not giving money in the day one. In your cash credit limit, I am opening the account with a limit, which you can use it. But in LC, when you want to make the payment on particular day, that date only our money flow will be out. That is the reason charges are very low. Second thing, sir, my supplier is not agreeing. He is not agreeing, he is not believing all those things, right? Other way around we can do, we can go for a bill discounting. So purchase bill discounting we can go. So there is an agreement between you and he, you take a pro forma invoice you give the bank and take the limit, and that invoice whatever he is raising, based on that invoice we can fund. Okay. Again, here end use is monitored, your rate of interest will be minimum. At least 2% lesser than your normal working capital CC limit. Okay. Now this is the things from the purchase side. Now when you are coming to the sale side, same thing. Either you can take a LC from your parties for safeguarding your this thing, or no, it is a clean bill. We can discount whatever the usance period. Okay. So now by doing this, what is the advantage? Only the savings in the rate of interest, very minimum security cover. Unlike your normal OD facility, banker will not insist for the security. Right. Now, if you are structuring our need in this manner, lot of concession we can have. Last point before breaking it for the lunch. Traditionally, our regulators, RBI is the regulators, the guidelines are, even today it is tilted in favor of the banks. Say for example, COVID has come, right? 30% of the limit has been given as a GECL loan or COVID loan, right? Today, 90% of the loans are repaid without any default. So this is the success of MSME, right? This is a very big success of MSME. So it's like granting a TOD at the time of pandemic, but without any issues, the entire loan has been repaid, right? Now this is the advantage. Just example I am telling. Now, government, whatever the guidelines are, this thing, it is naturally it will be favored towards the banking only. Next, suppose if you are into the export or if you are into the import, all your norms, say for example your export is getting delayed. So you have taken the order, but you are not in a position to export because your buyer is telling you postpone the order by another 2 months. So now naturally if you are not paying 90 days, within 90 days your account will become classified as a NPA. Now such a scenario may RBI, there are a lot of provisions are there, we can go for a extension without affecting your credit quality. Okay. So without, in the direct sense, without hampering your CIBIL CMR scores. Right. So third thing, wherever there is a subsidy or any schemes, it is 100% it has to be backed through the banking channel only. Okay. See, lot of very, very innovative schemes are there. Somebody was talking about AIF, Agriculture Infrastructure Fund. MSME people are thinking it is only for the agriculturists. No. Drones we can fund. Setting up the drones we can, not setting up the drones, for purchase of the drones we can use if they are using it for in the field, agriculture field. Today, lot of drones are used for fertigation, irrigation activities. So we can fund under AIF. 9% is the ceiling in the rate of interest. 3% is getting as a form of given by the subvention. Only effective rate is 6%. This is a central government scheme. State government is having a lot of other add-on subsidies. Say for example, Punjab, they are having another 3% subsidy. Rajasthan, they are having a 2% subsidy. UP, they are giving a capital subsidy of 30% on the same AF loan. So there is a central government scheme topped up with the state government agencies. Right. Now, I am a manufacturer of agri commodities. I wanted to set up a godown. Naturally, you can set it up under AF scheme. Okay. So, other than that, MSME ka our mind 100 crore loan, up to 100 crore loan can be classified as a MSME. If you are into the food and agro processing industries. Startups, we can avail the loan up to 5 crore. Okay. So these are all the few benefits from if you are having a tie-up with the banking channels. Okay. And when you are having a tie-up with the banking channel, keep two things in your mind. When you are in difficult times, bankers should support you. So this is the number one. Number two, from your side, your accounts and a track record should be very clean and hygiene. Only thing with this, I will conclude.